Today I'm joined by Tim Ridley, our Deputy Chief Investment Officer. Tim, thanks very much for joining us. There's a bit of uncertainty in the markets as we see significant change because of what's happening in the US banks and also the European banks. Can you just tell the listeners a little bit about what's happening?
Thanks, Sean. Yes, the environment has changed a lot over the last few weeks. Prior to that point, what we had is a lot of inflation in the global economy and also in the Australian economy. And what central banks were trying to do was raise interest rates progressively, although they raised them very quickly because they were slow to raise interest rates initially. So they were trying to catch up, if you like. And through that process, what we've seen is some of the riskier behaviours been exposed. And one example of that is some of the banks in the US. So some of the banks in the US have had bank runs, depositors have tried to withdraw money from the bank, and eventually the bank didn't have enough money to provide the depositors, and the Fed needed to step in, and as a consequence changed the rules. And through this process it was quite destabilising. It created some fear in markets, particularly in relation to the US banking system. We've also seen some of that fear gravitate across to Europe with Credit Suisse, and Credit Suisse has been rescued, if you like, by UBS through an announcement over the last day or so in relation to UBS buying Credit Suisse at a very low price.
Thanks, Tim. So a bit to think about for the US and European banks. What about Australia? Could we see similar impacts here?
So it's unclear how this will impact Australia, but the first assessment would be Australia's probably better positioned in a general sense from a regulatory perspective. One of the issues in relation to the US is you had a two-level regulatory system, so the larger banks had stronger regulation than the smaller to mid-sized banks, and the problems have emanated from the mid-sized banks in the US. In Australia, that regulation, I think, places us in a better position than in the US. That said, we do have a housing market that has prices falling quite rapidly at the moment, and that is the key risk from the banking perspective here. And we do think there's a risk of recession in Australia over the next 12 months, although it's not our central case at this point.
And so, Tim, for our members, performance is always something that they're interested in hearing about. We had negative returns last year, obviously. And so what does the outlook look like for our members from a performance perspective?
So again, this is a very uncertain environment. There's a number of different scenarios that may play out. Our central case is this further downward pressure on equities. So there's some further negative performance most likely to come. Eventually, though, we would see a bottom in equity markets and then a progressive rise over the next few years. So we believe we're closer to the end point of this process, remembering that the US equity market peaked in early January last year. So we're about 15 months from that peak. And these processes normally don't last more than, say, 2 years. So we anticipate seeing a trough in equities during the course of this year and a progressive improvement once that trough occurs.
Thanks, Tim. Just a reminder to members, we do have financial advice. If members are looking to get advice on which investment option is appropriate for them or any other matters, feel free to give us a call. Contact centre is always available. The team are ready to take any questions you may have. As always, Tim, thanks for your update today. And if there's any feedback from members, feel free to reach out. Thank you.